What's up, everyone? It's Kirsh. If you guys don't know me, I'm the owner of Team New Age, an eSports organization. A lot of people have been asking me to make a video like this. They always ask, Kirsh, how did you afford Team New Age? Do you guys have investors? And this video will address a major source of the funding for Team New Age, which has been investing, either from me or one of the other owners. I've been an investor for the past 5 years. 6 years, actually. I'm 24. As soon as I was 18, I opened up my own brokerage account. But in this video, I'm going to show you guys how if you're under 18, you can start investing, why it's so important, some ideas of what you should be looking at when you're buying in terms of risk and how long until you need the money and things like that, and just basically going over some of my investments, some of the mistakes I've made, and just trying to honestly, not trying to make a really long video, just trying to give you guys all the information you can have. If you have any questions, please leave them below in the comments. If this video does well, I'm happy to make more. So make sure you drop a like. As I said, put a comment down below if you have any questions, and subscribe for more videos like this. But let's get right into the video. Okay, so the first thing I want to address is what is the stock market, right? The stock market, put very simply, is a place where people like you and I, if you're over the age of 18 or have consent of your parent, which I'll show you guys in a second, if you're under 18, can buy and sell shares of publicly traded companies. So what that means is if you want to go invest and be an owner, literally an owner, in a company like Apple, you can go on to any website, any brokerage site. You can go to fidelity.com. This is one that I use. You just type in Apple. That's the quote for Apple. So I can buy a piece of Apple. There's also ways to buy less than this. Recently you can buy fractions of these shares. I'll show you guys that later too. But if you want to buy one share, one piece of Apple, you can make an account. I'll show you guys how to do that if you're under 18, and literally click trade. It's going to tell me to log in, but it would say you put in one share and you buy it $116, you own a piece of Apple. What that means is you literally, as I said, are an investor of Apple. It's super cool. If you believe in a company, recommend you do that. Obviously, understand the company. That's, once again, this video is putting stuff very, very simply, but that is what the stock market is. If Apple releases iPhones and they beat expectations on how much they're going to sell, the price of Apple will go up. If Apple's new computers suck and no one buys them, the price of Apple will go down. So the price is really driven by supply and demand, how much someone is willing to buy a piece of Apple for and how much someone is willing to sell a piece of Apple for. When you guys meet in the middle, that's what the price of Apple, one share, is worth. Of course, there are also a lot of other complicated measures and factors that go into what affects the price of a stock. I can just go to like Yahoo Finance. I don't want to touch this a lot in this video because I want to keep it really simple. But there's things like revenue growth, how much sales they have this year compared to last year, your PE ratio, which is basically how much you're paying per share, what Apple makes. There's a lot of these ratios. I don't want to touch it in this video, but put simply, as I said, it's what someone's willing to buy it for versus what someone's willing to sell it for. Now what I want to touch into, because I don't want to make this video super long and I want to get to the point, a lot of people ask, how do you invest if you're under 18? And the answer is a custodial account. What that means, as I said, is if you're under 18, you do need a parent or guardian's consent. But what you do, you can go to fidelity.com, you can go to any brokerage, open a custodial account. Are you a Fidelity customer? No. I'll just make this, I'm going to go through this to say you're John Herbert Smith. Put in an email, gmail@gmail.com. Okay, so you're going to fill out all this info, right? Yeah, so you're going to put in your social security number. I'm going to put that in. Blah, blah, blah. You go to next. It's probably not going to let me. Okay, so, but basically you just follow these steps, and then it's going to ask for your parents' social security number as well. And once you set up an account, it will be under your parents, but you will be able to trade under their consent. And when you turn 18, all the money is yours. So this is a great way to get involved. Go to any website that is a broker that has a custodial site. Most of them should be $0 per trade. Make sure that is there. Make sure that they're not charging you per trade, because recently most places don't do that. And open up an account, and yeah. Okay, next I want to talk about why it is so important for young people to invest, why people always say the rich get richer, why you see all these people getting super rich during when you think, you know, unemployment was just crazy high, everyone was losing their jobs, but you hear all these stories, Jeff Bezos making so much money, Bill Gates making so much money. The reason is because they own stocks, among other investments. But basically, let's start off with why owning stocks is so great. When you go to sleep and you own shares of a stock in Apple, in Amazon, and Facebook, when you're sleeping, if Apple or Amazon or Facebook does something well, the value of their company will go up, meaning the share that you own of that company will go up with it. So literally while you're sleeping, if Apple announces that their iPhones are selling better than normal, your shares of Apple will increase in price. You're literally sleeping, but your money on paper is going up. So that is why investing is so important. You're putting your money to work for you. When you're sleeping, you can be making money. Now let's talk about why it's so important to invest at a young age and the power of compound interest. This is a graph of the S&P 500, which is 500 large companies in the US. A lot of investors use this to track the overall health of the stock market, not the economy, over the past 90 years. So you can see in general, things trend upwards. Now, let's pull up a compound interest calculator and why it is so important to invest at a young age. Say you literally have $1,000, right? And you're contributing $0. And you're 16 years old, right? You don't need this money until you're gonna retire at 65, right? So that is 49 years, right? 49 years. Average rate of return over the past 100 years, this only goes back about 30 years. Average rate of return has been 7 to 10%. It's closer to 10% for the S&P 500. So let's be conservative and say like 8%. Okay, you're getting 8% a year and 0. Look, this is how much, just from starting with $1,000, literally $1,000, and you put it away and don't look at it at all, you will have $43,000 by the time you invest, right? Let's say you start with a little more. Say you graduate college, you have $5,000 saved up, and you want to put in $500 a month, 45 years, because you graduated college. Calculate. You have $2.4 million just from starting with $5,000 at the age of 18, putting in $500 a month. This is likely going to go up if you make, say, by the age of 40, you're making $80,000 a year, you have a good paying job. It can be way higher, even if you can put $1,000 or $1,500 a month by the time you're 40. I'm just trying to show you guys the power of compound interest and why investing so early is important. You started with $5,000. Obviously, this number is going to go higher as you get older. You will wind up with $7.1 million. This is why, guys, like, imagine you have even $1 million. I think that's $1 million, right? And you're this is why rich people get so rich. Say you're contributing $5,000 a year. You're gonna have 55 million. Like, this is why the rich get richer, because they have the money to invest. Their money's going to work for them when they're asleep. This is why it's so important for young people to get involved so that they can take advantage of the gains in the stock market. Because as I said, the stock market's not the economy. And usually what happens, the stock market goes up, is usually the rich people getting richer, because they're the ones that know about this. They're the ones that are doing it. It's not a secret. It's as simple as what I just showed you. You go, make a custodial account, and you can start buying shares of companies. Okay, as I said, I don't want to make this video super long. I can come back and make more videos if you guys have comments, more specific things you guys want me to touch on. Now I'm going to talk about like my past with investing, how I made $100,000 in the past 5 years from investing, some of my first investments, and what my current portfolio looks like today. Okay, I'm going to show you guys my Schwab rate of return for this year. It's doing very well. The rate of return just for the stock market, if you just put in the stock market, would be 11.3%. But mine is 66%. So I've done almost 6 times better than the stock market. I'll show you guys the portfolio right now. It hasn't changed much for this year. After COVID came out, a lot of stocks crashed in price. General rule of thumb, you want to buy when stocks are cheap and sell them when they're high. So this is what I've invested in. You can see Google, Apple, Beyond Meat, Blackstone Group, Cisco, General Motors, Gilead Sciences, JP Morgan, Nike, Novavax, Palo Alto Networks, Tesla, Walmart, Disney, and Waste Management. You can see there's a lot of technology stocks here, and you can see that I also mix in some like safer companies like General Motors, Walmart, Waste Management. But once again, another thing I want to point out, this is not an extremely like complicated list, right? We all use Google, we all use Apple. A lot of us know what Beyond Meat is, General Motors, Nike. Novavax was you can see them up 900%. This was a vaccine company I took a bet on. Tesla, Walmart. These are not, it's not some crazy science. This is the rate of return I've gotten investing in pretty common names. Anyone can do this. It's not rocket science. I did time it well, which is very hard, but when everything crashed, you can see like here, this was right before COVID. This is after COVID. Everything went down 31%. And just from my experience of investing, listening to guys like Warren Buffett, you want to buy when stocks are low. So even after this crash, it's happened before, crashes have happened before, general trend, things go upward. So even if things kept going down, I knew I luckily don't need the money for a while because I'm only 24. So buy low, whether it's 5 years from now, 10 years from now, it will most likely be higher given history. If you pick anywhere on this graph, today is higher. So buy low, sell high. These are my current investments in Schwab. It's not rocket science. Google has a monopoly on searches. Their ad revenue was affected because of COVID, because companies are spending less money. I figured that would return. Apple as well was crushed by COVID and some production issues, has returned. And these are also names that I've been in and out of since 2015. My next account is my Fidelity account. This is actually a Roth IRA, which is a retirement account, which basically defers taxes so I can pay less taxes. I can pay taxes at a different tax rate. Once again, I don't want to get complex. I'll show you guys my portfolio here because a lot of you guys asked, Kirsh, what do I buy? Here is my Fidelity account. Once again, pretty basic, safe investments. I mean, by safe, I mean good name companies. You have Amazon, I have more Google. India, getting a little more complex here. India was hit really hard. Their stock market was hit really hard because of COVID. I bought low, I'm up 44%. This fund tracks the largest companies in India. It's a developing nation. I believe in this truly. India's past China in population, booming economy. Projected to be a booming economy, so that's the reason for that investment. Johnson & Johnson makes all the baby powder and stuff like that. Huge company. No plans of going broke. Obviously, no company does, but it's a huge company. Netflix. I'm only up 34%, but I've been investing in Netflix since 2015. I think I have a screenshot somewhere. I'm up probably close to 1,000%. Procter & Gamble, another similar to Johnson & Johnson, makes a lot of things. So these companies are, as I said, big, huge companies. I'm not taking any huge risks, and I still have a 66% rate of return. So yeah, and Roku, up 500%. Don't look at this one, guys. TerraTech is a marijuana company. I've made a few bets in marijuana. TerraTech is my worst one. I'm down 96%, guys. GG's. But yeah, you see, even with a 96% loss, I'm still up a lot. And Visa, of course. So now I want to show kind of what I've invested in over the years, how I made $100,000. I started with about $15,000. I started with about $15,000 in 2015, 2016. I worked in high school for a few years, and after college I had a few internships where I made a couple $1,000s over the summer, and basically I'd be excited. My check would come in Friday. As soon as the stock market would open Monday, literally on my way to work, I'd be in Robinhood, say, oh my god, I just got my $500 in, I'm gonna buy this. A huge factor to my success, I don't want to say huge, but one of the largest gains, or one of my best buys ever, was AMD. I bought it at $10.86 back in December 13 of 2016. Now, if we Google AMD today, it was at $10 when I bought it. It's now $87, and I bought it in December of 2016, up 700%. I've been in and out of AMD. One of the biggest regrets or things I've done wrong as a young investor is be impatient. I get scared, you know, when it gets to here, I get really scared. It starts dropping. I'm like, oh my god, I'm gonna sell. It's gonna crash. I think I did do that then. It crashed, and then I missed out on a bunch of these gains. So just be patient with your stocks. Buy and hold for the long term. That is the best thing. That's my best piece of advice. If I had held this, I would have gotten the full 900% return. Being honest, I've sold and bought a few times. I still have done very well in it. Another one of my initial buys was Netflix that I was talking about. Once again, around 2015, 2016. Probably another one of my best investments. I think about in August of 2015. That was when I had this internship. 300%. Things like that. And now I want to get into what I'm buying today and my situation today. As many of you know, I've started Team New Age. It does cost money to run the company. I have sold a bunch of my investments to be able to fund Team New Age. But what I'm buying today, well, I mean, you guys saw my portfolio for today. I'll pull it up again. This is my Schwab account. This is what I'm holding right now, and my Fidelity right here. So these are my holdings right now. But right before I started Team New Age was the coronavirus pandemic. I was doing way more active trading. I was looking at all these companies that are getting hammered by COVID. It's like, where's good opportunity? And that's why I have such high rate of returns on these. They were hammered by COVID. So a lot of companies that were hammered by COVID were all these event companies that you can go to, like Live Nation. They do outdoor events. You can see absolutely hammered. They've recovered very well. Cruise lines. So that led me to believe, you know, I was trading Carnival Cruise Line. They're still very, very hammered by coronavirus, down 60-70%. And now with the vaccine news, you figure, you know, Americans love to cruise. People all around the world love to cruise. Likely people will start going on cruises again. Obviously, it's not that simple. You have to figure out how much debt this company has, how much they're making. If they have enough money to survive until cruise lines come back. But I did initiate a position in Carnival Cruise today. There's a lot of reasons why, in terms of their balance sheet and things like that. Once again, it's complex. I don't want to explain it for this video. But I did buy Carnival Cruise Line yesterday. I think that they are well poised as a cruise line with their balance sheet to survive the coronavirus pandemic and come out on the other side as a healthier company. This is a very speculative, this is a risky bet. IPOB is a SPAC. It's a special purpose acquisitions company, which basically lets a company go public And what it is Open Door. Open Door is a company that is kind of like the Amazon of buying homes. You go online and it's, like I said, it's Amazon of buying homes. They've only penetrated like 0.1% of the market. Revenue is going crazy, and I think there's huge potential here for them to infiltrate a untapped market and truly be the next Amazon of buying homes. So I initiated a position IPOB. Once again, a lot of reasons I don't want to touch in this video. And yeah, I think that's it for this video. Once again, if you made it this far, please drop comments below your questions. I will make another one of these videos if you guys want to get more in depth into maybe crypto, or if you guys want to know my thoughts on stocks, I'm happy to answer them in a future video. Once again, this is try to keep it as basic as possible. Thank you guys so much. Drop a comment, leave a like, subscribe for more, and peace out, guys.